Namaskar. Welcome back to another live Thursday evening. Today, actually 6 p.m., not 7 p.m. So, let's talk about the mortgage approval process. How you can qualify for a mortgage, even if you're a first-time home buyer or a second-time home buyer. You're buying a rental property. How to keep buying? There are many concerns like how many years experience, how many years work should have been doing. Um, if you're a self-employed, how many years of experience you need to have to get qualified for a mortgage. How to keep your credit at a good level so that you don't get rejected by the mortgage, by the lender. So all those kind of questions let's cover today. So with that, first of all, welcome to the channel. And my name is Aditya Soma. If you are new to this channel, I'm a real estate investor and a realtor here in Windsor, Ontario. And today I have a special guest for you guys, who is none other than, if you don't know.
I'm Mamata Nalla. I'm wife of Aditya Soma.
Yeah. So, and also congratulations on your new license.
Thank you.
So today she was like, I want to introduce you guys because you're the first, you're attending the live for the first time, right?
Yeah.
So after doing this live for many months, she's coming for the first time because I thought it's an inspiration what she did for last few months and more than a year actually. What she's been doing in the back end would help many of you understand, especially many people ask me questions about how to get a license. How long does it take? Because she, we probably you all know that we have a baby recently. Now she's like close to 3 months, and um, Mamta started her exams actually. It was when you're like 4 months pregnant, or
Yeah, 4 months pregnant. Somewhere around.
so that's a I thought that's an inspiration story for many people who are like been giving yourself reasons. So probably you can ask her any questions you have related to how to get a license, any tips for license, because you cleared off when you're you know pregnant, and it's like within you finished how many months?
Um, 4 months.
So pregnant and completed license in 4 months, and also while working in the back end for our sales and investing side. So any questions on that side, feel free to ask. So like I mentioned, I'll start with the mortgage side questions, common questions I get, and some tips on how you can get qualified faster than you think, because this is a big lot of myths about mortgage. A lot of people think that, oh, I don't get qualified, so I'll wait for next 1 year 2 years to until buy a property. Even when we bought our first property, if you remember, we didn't have permanent residency. I mean, now the rules has changed, who are on work permit, but we still qualified for a mortgage. But the A lenders, RBC said no. I think even CIBC said no. So a couple of big banks said no. Then we didn't take the no as an answer. We spoke to other mortgage brokers, and finally, National Bank said, "Okay, we'll give you, even though you're on permanent residency, we'll give you for 5% down." Because I was looking for only 5% down, not more. Because we didn't
We
have
don't
more.
have money. Yeah, we didn't have it. Yeah.
Yeah. So the thing is, the first step is sitting down with a mortgage person. That's a big step that would help you, because you don't know whether you qualify or not. And even if one lender says no, that doesn't mean no. So talk to people until you get the answer yes. So flying start, namaskar. Thank you, brother. Vijay, love from Nizamabad. Thank you, Vijay. Happy New Year, Gurvinder. One question I have, if it's okay to make basement or put that money for down payment in Calgary. Good question. This is a common question I get, because to make a basement a legal unit, it's quite a bit of money. So it depends on where your current property is and depends on what's your goals. So if your goal is to invest into more properties, especially in the time right now, I would recommend investing into a second property rather than putting money into basement, because to convert a basement legally, at least in Windsor, it would cost minimum 50,000. If, again, also there are many ifs and buts depending on how much height you have in the basement, how big is your windows, do you have a grid entrance, and where is your plumbing, because you need to have a kitchen, you need to have a drain and all those things. So depending on those things, but mostly I have seen it's an expensive project. It will cost you at least 50 grand, 60 grand to convert. I even had spent more than 100,000 in two of my legal unit process because I redid the whole thing. But that being said, even if you have to invest like 60 to 100 grand, rather investing into the property right now, because right now the market is unstable. That means there is no guarantee that the price is going to increase in next 6 months. But we have seen a solid drop in the prices. So instead of putting that money in your own property, because if you refinance, you might not be able to take your money out. But if you have a property, if you are buying another property, doesn't matter where you're buying, if you can afford with that same amount of money that you, instead of putting in the basement, now you're leveraging and buying another investment property. So now, if you're buying another investment property, right now the market is not that great. Like it's not in a the highest best times. So that means in over the period in next 1 2 3 years, once the interest rates adjust, you might be able to your property, without even doing any improvements, your property value go up. So the leverage is something that is crucial, especially if you're thinking of thinking of growing your portfolio. So I would still recommend, um, maybe you want to check the baby.
Yeah.
Sorry
Maybe
guys.
that is okay.
The baby is crying so hard, so probably she need, yeah, probably parents can understand this. You got to jump in and out. But yeah, so long story short, if you're planning to expand your portfolio, this is the time where if you put that money into your basement, you might not be able to take it out for next 1 or 2 years. Rather, if you're leveraging, you can have double and do advantages, because your property, the current property, you can do that basement renovation anytime in future when the value is going up. If you do it at that point, you can take the money out. Whereas if you're buying a property now, when the value go up, you can refinance this property, you can refinance this property, and invest into multiple properties. So that's my advice. I'm based in Calgary. Again, I'm talking generally in any area, right? Like, so in general, but also, like I said, it depends on your personal scenario, right? Like where you're, what's your goals, where you're going towards. Some people don't want to leverage too much. So if you're that person, maybe finishing the basement and having that unit make more sense. I have a new home of 208 2,800 square feet in the cities. Okay. So you have space, right? Like, so that's a good place to be in. You can make that basement anytime. But if your concern is like whether to do the basement or buy another property, this is the time. If you're looking to expand, maybe buying another property would be a better option. Is it okay to apply for a HELOC? Great question. Especially if you're sitting on equity. If you already have a home, let's say the home, you have a mortgage of 400,000, and if your current value is $1 million, let's say, if you refinance, or if you just ask the lender, if your current lender allow you to have a HELOC, then having a HELOC doesn't hurt you, um, most of the cases, because now HELOC is nothing but a line of credit that you're borrowing money against your property, and you pay interest only when you use that money. But the markets like this, if you have access to the funds, can allow you to get into investing into a different property or even stocks, because right now a lot of things are on discount, and we don't know how long this discount going to be. Because when the market was crazy, like since 2015, 16, 17, there are many people they couldn't buy because the prices were going up every month, every week, every year. So whereas now it's the other way around. So good to have access to HELOC, good to apply. Ruben, love your content. Thank you, brother. Thank you. Glad to hear. Based out of Hamilton. Yeah, good to hear. Thank you, brother. Hey, Ankit, quick question. Can we do a VTB for 2 years if a person is still on work permit? So, uh, first of all, if you're on work permit, you're not allowed to buy a residential property unless you've been working full time for at least last 3 years and you paid your last 3 years taxes in a span of 4 years. If that's the case, if you're within that 3 years, first of all, you're not allowed to buy because of the foreign buyer ban. The other way, uh, if you're looking at a property that is not under residential, if it's not a residential property, so based on the foreign buyer ban, the residential properties are the one that are under 3 units, three or less. If it's a 6 unit or 10 unit building, and you have a seller who is willing to hold back, then yes, why not? That's possible, that's doable, and that's a great idea, because now you're leveraging and you're taking advantage of the market, because in a normal market VTBs were very, very, very tough. But now there are people who are scared of interest rates. Some of them have leveraged too many. They bought like multiple properties, like we have seen in the news, like someone bought 2 million properties and now they couldn't close. So those are the scenarios where people are in those scenarios. Some of them are willing to sell some of their portfolio so they don't have to go through the bankruptcy position. So yeah, if you can find those kind of situations, why not take advantage of it? um, so going back to the mortgage qualification process, so if you're a first time home buyer, if you want to know how much you would qualify for, of course, like I said, the first thing is sit down with the mortgage person. But even before that, if you want to just have a basic idea, a ballpark, a calculation is um, 4 times of your income. If you're making 100,000, generally you qualify for 400,000. That is considering that your credit score is good. Always try to maintain your credit score at least above 700. How can you check your credit score? If you don't know this, you can get a free credit score report on Equifax. You can go there, I think once in a year or something like that. Check on their website, Equifax. You can download your own credit report, so you know where you're standing with your credit. So let me quickly sip a coffee while you're asking any questions. So make sure you have a good credit score, and assuming that you don't have too much usage on your credits, like you don't have any credit loans, car loans, or student loans. If you do, then better sit down with the mortgage person, because they will be able to um, run the numbers thoroughly and tell you if you would qualify or not. And one of the common question I got was, hey, I have permanent residency, but I've been working only for 1 year or 6 months. Do I qualify? Most likely you do if you don't have a probation period on your job offer. So if you're already crossed your probation period, then most likely you will qualify, because lenders, they consider you're a first time home buyer if you have a full time job and it's within your field. Welcome back.
Thank you. Sorry about that.
You don't have to be sorry for the baby. It's a must. You need to be there. Um, so you most likely you will qualify, but this is where sit down with a professional, have a good idea. So don't just make your own stories that you don't qualify. Um, Another common question I got is like regarding the down payment. How much money do I need? How long does it need to be in my bank account in order to qualify for a loan? So, first of all, generally, most of the banks look for having your down payment in your bank account for at least last 3 months. last 3 months. So that's the general rule of thumb. Again, there are some lenders who might do an exception. This is why for exceptions, you better sit down with a mortgage professional. But how much down payment? Again, this is a scenario that I made a lot of reels on. So if you're a first time home buyer, if you're looking to buy a house for you to live in, you can buy a property for as low as 5% down. But with the exceptions, or if a property price is under 500,000, and if it's single family or a duplex, only those two properties you can buy for 5% down, so which is 25,000 on the 5%. Or if your property value is more than 500,000 but less than 1 million, then you pay 5% on the first 500,000 and 10% on the remaining amount. So let's say you are buying a 700,000 property. So you pay 5% on the 500,000, which is 25,000, and 10% on the 200,000, which is 20,000. So you pay total 400 $45,000 deposit down payment. That's how much you need. If it's over a million, of course, more you need to have minimum 20% down. And in the meanwhile, if you have any questions, feel free to ask Mamta, because you always have a good questions. So I'm sure our listeners can enjoy your questions as well. So let's continue here. Before I continue with some of my tips here, let's look at some comments. Ali, hello. I have an investment condo in Waterloo. I was thinking of refinancing that. Invest in Windsor student rental. Do you think it's a good time to refinance a property considering the interest rates? So, great question, Ali. This is where no one can tell you what exactly is the right step for you. But here is I'll assume some things and I'll give you some suggestions. Number one, uh, if you're looking to expand your portfolio, you want to have multiple properties, then yes, even though sorry, before I say yes, that's number one. You're looking to expand your portfolio. Number two, if you have a financially like a stable job, you have a decent savings, you know that you can afford that in the extra payment that is coming out of your condo. Big, that's second thing, very important. You have that funds, or you have that sources. And third thing, what would happen? Let's say your condo is worth a 500,000 right now, and you have a 100,000 mortgage. So now the condo worth 500,000. If you refinance, you will be able to get a loan for 400,000. So that means your monthly payments will come based on the 400,000. So you can pull 300,000 out, use that money to invest. But now the question is, you have to pay payments for this one, and you have to qualify for the other property as well. So make sure, do the calculations. How much income would you generate from that condo? How much negative balance that you have to pay if you're leveraging? And also based on that money that you have, so the money that is coming from that condo, the property that you're buying, how much income can you generate? So generally, if you're buying a property around 400,000 in Windsor around student rental area, probably you can generate around $3,000. So now do your math. Okay, I'm getting 3,000 income here from the new property, and whatever the X amount of income, let's me assume, just make assumption that your condo is also making another $3,000. So you're making 3,000 here, 3,000 here. How much is your total expense with that new mortgage and with this new mortgage as well? So because here you refinanced, here you added a new mortgage. Do your math. How much mortgages you have, how much property tax you have to pay, how much insurance you have to pay. Are you do you have to come up with extra money, or you're staying, your rent's paying most of your expenses? So you have to do that math to make that decision. Even if you're coming out negative, because the condo in Toronto might be, might not make positive cash flow, but you have savings, or you have extra source of funds that are coming in, from your job, and I don't know your financial situation, right? So you look into those things, and then if you're still in a good position, then definitely it's a good time to buy, because in Windsor right now there is almost a 35% drop in the prices. That's an average. Of course, some areas are less, some areas are more, some type of properties has reduced less, some properties has not that much. But in general, the overall market is in the buyer's like favor. So but it's more like a buyer's market, because just 8 months ago it was a seller's market. So now the buyers has more power. You can negotiate, you can lowball offers. So obviously that's an advantage. You're, even though you're getting at a high rate, but you're locking your price for lower price. And if the market, once the interest rates shift, once the prices start going up, then probably you're leveraging on that timing of the market. Make sense? If you have any follow-up question, let me know in the comments below. And if you guys been following, that me and my team are realtors in Windsor, Ontario. And of course, if you want to sit down and have a call, Zoom call, mm, DM me on Instagram. My assistant will schedule a call with you guys. Happy to discuss further more specific solutions for your personal situation. So we can do that. Gurvinder, I'm based in Calgary. Is it okay to expand portfolio in Calgary only or see opportunities in GTO too? I mean, again, this is a great question. Personally, I have most of my properties in Windsor, but I just recently bought a pre-construction in Calgary because I just want to leverage. I love Windsor because Windsor has a lot of potential. But that being said, keeping all the eggs in one basket doesn't make sense. That's why I have one pre-construction in GTA, one pre-construction in Calgary. But again, this is where your personal opinion on the market, personal interest, personal goals, and your network also does matter, because don't just blindly go buy in GTA because you want to have another property. Where are you currently standing financially? What's your how much savings do you have? What do you make monthly? After all your expenses, how much do you save? All those things matter, because buying a property in GTA is not that cheap, and generally they don't make cash flow. So that means you have to pay from your pocket monthly. So do all those math, and then consider after that. Generally I tend to focus on the areas where I see there is a growth happening, where there is more jobs coming in, there is more people moving in, and where there is still positive cash flow possible. Those are my three most important criteria that I look. So again, you can have your own criteria, right? So everyone is different, everyone goals are different. Ruben, I got my license. My goal is to do what you and Armani are doing. What is the blueprint? So, if you want to become a successful real estate agent, what do you think me and Armani are doing? Let me know. What do you see that we both are doing that you think you can do? Let me know in the comments below before I answer. I wanna hear. I'll come back to your question and then I'll answer on that point. But I want to hear your thoughts first. Harsh, how can I buy a house on work permit? Good question. So, first of all, how long you been on work permit? Because the government of Canada politics, I hate it, but unfortunately, they banned foreign buyers. Technically, you're also a foreigner because you don't have a permanent residency or a citizenship, so you cannot buy a residential property. So what's the alternative? There are some exemptions. If you're a foreign buyer but you've been in Canada and you have a full-time job for the last 3 years, then you are exempted. Or if you're an international student, you've been studying for the last 5 years and you've been paying your taxes, and you lived in Canada for at least 244 days in a year. So out of 360 days, 365. So of course check on the Canada website for the specific exemptions. But those are some of the exemptions that I can think of that would allow you to buy residential. So if you're still not exempted, if you're still under that ban, then the other best possible scenario is find a partner. Do you have friends who are permanent residents, who are Canadians? Do they qualify for a mortgage? Maybe ask them to open a corporation. You be a minor, or you have an agreement on the side. So you're not on the title, you're nowhere. You just, give him the funds. You make that agreement however you want. Um, Buy with the partner whom you can trust, whom you know. The person, if you know someone who is like, who genuinely you traveled with them, you can really rely on, because it's a money, right? So if you know someone, that's another good way. Or if you have immediate family members who has a permanent residency or citizenship, that's another way. Or you can invest that money for now into passively, like, if you guys watched my other videos in the past, where I invested in a project, a multifamily project. So sorry, the other way around, where I bought a 27 unit building, where there are investors who gave me 50,000, 100,000. So they're not on the title. They have the ownership, like, some shares based on how much money they put in. So they have the ownership, they have the partnership, but they're not on the title. The corporation is on the title. So in that case, now they're not buying that, and also it's not a residential property. So it's kind of a joint venture, but you're buying into more like a syndication on a bigger deals, and you're putting, whatever the amount that you want to invest. So that's another way too. Um, and in the meanwhile, any ideas you want to add?
I have one question.
Sure.
Let's say I'm on work permit.
Yep.
And this rule was not
Yep.
exist before.
Yep.
And I got one property on contract, like it's a
Yep.
farm deal, and I'm on work permit, and I'm
Mhm.
getting everything ready for closing and everything. And let's say, and this rule came. So what is my
So
situation?
good question. If you already have a offer accepted, and we had a same situation with one of our client. Um, he had an accepted offer before January 1st, 2023.
Okay.
If it's a firm deal, then you're exempted,
Okay.
because you already have a deal accepted before the law passed.
Okay.
So now, after January 1st, if you have a firm deal, then you're in trouble, because the law already passed. They already gave a heads up. Even any realtors or any mortgage people, any lawyers who are helping them also can get penalty. Yes. So make sure, don't get into those challenges. Rather find these creative solutions to get in. You're welcome, Ali. So looks like our friend who asked for a question did not comment here, but I'll go back and answer your question anyways. So your goal is to uh, make a solid impression in this industry. If your goal is to become a top realtor, one thing is clear: you gotta learn real estate. You gotta know everything in and out about real estate, because personally, I'm an investor. Even my good friend Armand, he's an investor. He bought and sold multiple properties. I bought and sold multiple properties for myself. So that experience is immense. And we are super active on social media. Where I do these lives every week. It's 1 hour of my time. Why do you think I spend that? Because I'm educating my potential clients. So now when you get some value, you generally, what do? You tend to give that back. When you need help, you come back to me in Windsor. So be active, market yourself on social media as much as possible, because real estate, if you completely divide it into, if you want to learn how to come very successful in real estate, then divide your knowledge buckets into two things. One, you have to have a solid knowledge on real estate. Two, you have to have a solid knowledge on marketing. You need to know how to bring the leads. You need to know how to convert the leads. So those two things would not happen with the knowledge and the experience. So if you're completely a brand new person, you just got your license, then join a team. Who is doing which city you're in? Who, or can you find someone who is really crushing it in your area, whom you really inspire, whom you think can help you to learn, especially for first timers who are just new to the industry. There are a lot of things you don't know. Why don't you have someone hold your hand and teach you, and be the person who grabs it, who learns. When I actually started as a part of a team, Win City. I was part of it, but my mentor, and who started, the founder of Win City, Cassidy Loxon, she trained me for like 3 4 months, and she left on a world tour, and she left the Win City on me. So I was not planning for that quickly, but it just happened. But I learned a lot of things from her, because she was like, when I got my first property with her. I got like multiple properties, so bought and sold with her, at least like 4 transactions before I got my license. So I was already learning with her, because she was very active on social media at that time, and she was very young, like 22. She was like 5 years younger than me, but I was not hesitant. Like, I was just taking all the information, applying on myself, applying on in my business. So having a mentor like that also helps you to grow quickly. I think we answered this question. How can I buy? Okay, fantastic. So going back to the points that I'm making here, and by the way, if you're watching this for the first time, let me know what's your name, and let me know where you're from. Don't be shy. And also, here's one thing that I keep repeating: any challenges that you have, any questions you have, anything that is you think that is stopping you. We always have this subconscious running thoughts, right? Anything that is running in your brain that you think would help to ask, I would ask. So this live is for you to ask your questions, anything related to real estate. I'll do my best to answer. If I don't know, I will refer you to people who can answer those questions, because that would help you to get one step closer to your goals. So only way you can do that is by asking. So don't hesitate to put your questions in the comments below. Going back to our mortgage tips. So another common question I got is like, how many properties can I buy? I'm really, I got my first property, I have a second property, I want to buy more. When does the banks will say no to me? When would I, when would I be blocked? When would I not get an approval on the loan? So here's what: if you're someone who has ambitious goals, like big goals, who want to get multiple properties, then be smart from the get-go. Start working with one lender at a time. Go to the big five banks, start with one of them, and try to get as many loans as possible with that lender, even if it's a zero point 0.5 interest rate more, or 0.25. Because I seen a lot of the times, this is a big mistake many people make, especially if you have a goals to buy multiple properties. They tend to go for a lender who is giving a discounted rate, but those lenders sometimes don't have HELOCs, or don't have a payment pay down. There are a lot of restrictions that those have. Generally, big fives are very, very good with giving better terms. They sometimes even offer, if you remember our RBC account, we don't pay any payment. That is like $15 or something monthly payments.
Yeah, yeah.
They waive off, because we have our mortgage with them.
Yeah, yeah.
So I started with RBC. I bought like 4 or 5 properties until they said nope. Then I jumped into CABC. Now I'm leveraging with CABC as much as possible, because every lenders have certain different terms. Especially if you're starting with that goal of expanding your portfolio, start with one lender, and have your documentation clear. Have a folder, your last 3 4 years pay stubs, your last 3 4 years notice of assessment, your last 3 4 years of T4 general, if you're working full time. If you're self-employed, T1 general, T1 or T1A something. The tax documents, right? and plus your bank statements, last 3 months bank statements. So when you have all these documents properly presented to the mortgage person, now they tend to work with you more because you're very organized. You will be able to give them all the information they needed. It makes their life easy to qualify you. And the qualification, process is also very important, because sometimes when you don't provide the right documents, they would get distracted and they would not give you the right information. So whereas when you have a proper documentation, it's easy. And especially if you want to expand your portfolio, that's easy as well, because now they know exactly who you are. They have all your information. And when you work with one lender at a time, now you leverage that whole lender, because once they have your file, what would change in future when you go for your second property, probably your job letter, and maybe your pay stubs, and your notice of assessment or T4, anything for that year. Rest everything they already have it. If you have rental properties, make sure you have all the lease agreements in place. Make sure you have that account separate for that particular property. So that way, when you go for another property approval, you provide all this in an organized way. So now they don't have to run around to give you a approval. And that is a very solid asset, because when you have a clear idea on what you can get, and they will be able to process your application quicker, you will be able to get discounted properties, because now you can negotiate harder, because you know exactly what you qualify for. Your lender has your details. When you have a property, you send them the property address, MLS copy, they get you approval in short period. So when you have a approval quickly, then you can go back and negotiate with them, because nowadays there are people asking for 10 business days conditions, 5 business days conditions. So if you're making no conditions because you already got all your approvals from your lender, it will help you to negotiate on the price. So make sure, look for those things. And if you want to continue to buy more properties to get qualified, another important piece many people miss is make sure you buy cash flowing properties. Why? Because you're making $100,000, right? Just example, you're making $100,000, and you bought a maximized your loan amount, whatever you qualified for, you bought the property. And if it's making negative balance, then when you go for another property, your qualification will go down, because you have to pay money from your pocket for this property. Whereas if this property is making positive cash flow, now when you go for second loan, they look at your current income and this property income, and they minus your debt, income to debt ratio. The mortgage people have a calculator that they look into. They consider all your income and your expenses. So your rental income is also income, but your rental property also have expenses, your mortgage, your insurance, your taxes. So they embed that into it, and then they qualify you for a new property. If it's positive cash flow, whatever you initially qualify for, most likely you will qualify for the same amount on your second property. And if your second property is also making positive cash flow, then you would do the same thing for the third property. That's how you buy multiple properties. But let's say you made a choice of going for a nice dream home. You're living in it, you have $1 million home, you have a bigger mortgage. Then how can you qualify for a second mortgage? Because now you're already maximized your usage, right? In that case, probably go for a big lender who qualifies the property, not just you. That's one way. Or there are properties like multifamily. You can go for a multifamily property if you have enough down payment. Most of the lenders, they qualify the property based on the property income. They qualify you if you have a good credit history. Even you maximize your loan amount on your primary home, there are most likely you will be able to qualify for another property as well. So before we continue here, let's quickly check the questions here. Robert, hi Aditya, if you're looking for a property right now and uh, dipped it between a variable and fixed terms loan, is there an interest rate that you would say it's fair and reasonable to fix a term? Um, Not really, Robert. So for fixed term, if you're going for fixed, the banks offer 2 years fixed, 3 years fixed, even 5 years fixed, or some of them even 7 years fixed. So it's hard to say which is the right, which is the good rate for a fixed amount. But rather, here is the website that I use, ratehub.ca. Ratehub.ca. Let me put up the link here. This website actually have all comparisons for different properties, if I understood your question correct. So let me just put up here. You're looking for property right now, debated between a variable and fixed terms loan. If there is an interest rate that would say is fair and reasonable for fixed terms. Um, you know what, Robert? Maybe I'm a little confused with the question. Um, if you're asking if there is a fair rate that makes you consider, then I'm on the right point. Click the ratehub.ca, go on there, check what lenders offer what. That will tell you, because the rates are changing, right? Like with this, the current timing, the rates are always, fluctuating. And sometimes some lenders have a discounted for variables. Sometimes they offer zero point 0.5 minus the prime, or some lenders offer zero point 0.7. Some lenders, even if you negotiate, they even offer zero point 0.9. This is another tip. Mm, don't hesitate to negotiate with your mortgage broker, because they have some mortgage agents have a capacity to negotiate with the underwriter and get your discount on your rate, if you have especially if you have a good credit and all. Or if you're asking now, debated between variable. Yeah, maybe if I answered your question correct, or if your question, if I didn't catch your question correct, let me know in the comments. Maybe I'm still not 100% sure about if I catch your question correct. Praveen, I want to check better mortgage from 3 different lenders, but one of the mortgage broker told me not need to take pre-approval, because he said he will actually qualify for a 4K house easily, because we are earners, 100K salary in Windsor, and we both have 700 credit score. Do you think if I check the mortgage with other lenders to compare best mortgage, is it going to affect my credit score? So here's my personal advice. When you're trying to get your first property, don't go talk to different lenders at the first place. First, get pre-approval from one lender. Get pre-approval from one lender and go find a property. Get a property with a decent closing, maybe 60 days. That's a very good closing. So now have that approved, because pre-approval doesn't change that much between each lender. It might change because ratios that each lender takes is a little different, but mostly they're around the same. Because CMHC or the insurer also involved, and insurer also runs their numbers, especially if you're buying a 5% down. If it's 20% down, then it's a different story. Then the lenders have their own ratios. So in that case, now get this property, get a form approval from lender, from one lender. Now, if you're not satisfied, if you see online, this lender has high rates, now because you have approval from one lender, then find out which are the other lenders who are offering better rates. Then just before you ask them to submit the application, just tell them, look, here I have an approval, I have a mortgage already approved for this terms and this rate. Can you do a better job than this? If they say yes, I can get you better, maybe 0.4% less, 0.5% less, whatever. If they promise you yes, I can do it, then only ask them to go through the process. If you like that lender, if that lender has all the terms that you're looking for, then only do that, because now you're saving yourself running around, and you're saving yourself your application going on to everyone's hand. Personally, I'm not a big fan of that, because that is one, you're wasting your own time, because you're submitting applications for everyone. Two, it is impacting on your credit as well, because now lender sees when anyone pulls your credit, it's not going to affect on just the score, right? When they review, oh, this guy is jumping from one lender, they're pulling a lot of credit checks. So that could become a negative red flag, right? Whereas have one approval in hand. Now you have closing time. Don't sign the documents, just get the approval. Now do a shopping. Start with the verbal shopping. Only if they're 100% confident, then do the submit the application. Make sense? Let me see more questions here. Nikhil Agarwal, I want to become a mortgage agent. I'm an international student. I want to do with a job so I can go to India for a few months and can operate from there too. Do you think it's a good plan? So Nikhil, here's my personal suggestion. When you want to do with the job, it depends on how good you are spending that extra hours. If you want to become an expert in one area, it's better to do full time, because I know I had my mortgage license when I was working full time. Do you remember?
Yeah.
I did three applications and then I quit because it was not easy. You have to be on the calls with your clients. You have to give them the approvals, pre-approvals. You have to get a lot of things to the underwriter, and generally in the mortgage industry even harder, because the mortgage underwriters only work during the working hours, which is 9 to 5. The underwriters doesn't work after that. So even though your clients work, but doesn't work after that, right? Like, so having a job plus another sales job is gonna be very hectic, unless, like I said, first thing is, unless you're very solid with multitasking and you're really good at spending, managing that. Unless that, you cannot really become an expert. And mortgage and sales, any sales, right? Like, matter of fact, agent or any career, I cannot imagine myself, helping hundreds of clients, being a full-time job, having a full-time job. So at least start. If you cannot do that full time right get go, maybe start part time while you're working full time. Start, do that, and have a goal. Because if you really want to become good, if you have to make sure, maybe within a year or 6 months or 2 years, have a goal that, okay, once I exceed my salary income from this part time, I'm going to quit my salary job, so that now I can focus on my full time job, on my the sales business. Because now sales is how much amount of efforts you put, that much income you can make. Make sense? Any comments you want to add? Robert, the reason why I asked is because OFSI came out of announcing that it will look to possibly tighten the lending conditions in April 2023, according to Bloomberg. So OFC, no idea what it means. Financial, okay, Superintendent of Financial. Actually, not sure about this, Robert. So yeah, I mean, they've been already tightening for a while now, right? Like, if you noticed, they're already increasing rates pretty often. Now the next announcement is on January 25th. If for the rates to, if the prime goes up again, the banks most likely increase their rates, because the banks make their decision based on the prime rate. So, I mean, not direct relation, but there is a solid relation between them. So, of course, they're already tightening. So today, I will be logging out in next 5 minutes, because we are going for a movie night with the team.
Yeah.
Yeah, are you excited? I'm excited because it's one of the Telugu stars. What's the movie name now? I forgot.
One thing, yeah.
Little bit louder. I cannot hear myself. I cannot hear myself. Maybe if someone who is also a Telugu person, who speaks Telugu, can understand, can know the movie name. It's
Yeah.
just released yesterday. We are a big movie guys. We love movies. That's our thing. So let's go back to the question. Sounds good, bro. Is National Bank good one for mortgage? I mean, that offered me at that time, but again, they were good for me. They're actually not bad. You know what? Honestly, I work with National Bank too. I have a
We have one more mortgage with them.
yeah, we have actually still
Right
yes,
now,
yes, because they're good with ADUs. They're the only specialty, like only one who is very good with the ADUs. In regular mortgage, everyone is pretty same because they're up there with the big five banks. They're the big sixth bank after the big five. So still pretty good lenders, and they're actually good for realtors because they offer some cash back for the realtors. If any of your client, if any realtor listening to this, if you have a good contact in the national bank, once in a while giving them business is not bad idea, because they give you some, like, 500 $1,000 something, depend on your amount. Probably I did like one or two applications in last 3 years with them, and that small cashback, I buy some gifts for my clients. So you're working from home. I mean, even then, bro, even if you're working from home, you have to spend time, right? Like you work, you're not working completely free, right? You have to work. Nitin, hi Aditya, would you recommend to create a different LLC for each investment property? As you may aware, the mortgage rates are more for LLC personal. Would you recommend? So, first of all, a disclosure, I'm not an accountant or a financial advisor to give this advice. Just random guy who has some investment properties on personal and corporation. I'll give my thoughts. So, first of all, I try not to have too many LLCs because, I mean, let's not use LLC. LLC is in US, corporations. In Canada, we use corporation word. So I don't like to keep too many corporations, but I like to keep my bookkeeping as clean as possible. So if I have, let's say, if I'm buying completely for myself, I want to have one corporation, maybe couple of properties in that corporation, especially if they're residential. If they're multifamily, so let me take a step back. Before even I make that decision whether to go on a corporation or which corporation to put this property under, first of all, if it's a multifamily, a bigger multifamily like more than 6 units, I will definitely have a separate corporation because it's $1 million asset, and I don't want that asset, if there is any challenges with that tenants, because there are multiple tenants. If anyone sues on that corporate sue that corporation, I don't want that to impact on my personal assets or my other corporation assets. So that's one of the biggest advantage. Again, this didn't happen, but in North America, you never know where the challenges come from. So it's always good to be prepared. So that's why I keep the bigger properties separate. And especially if I have a partner and only we both are doing a JV agreement and only for that particular property, maybe we do open a corporation and have those properties under that corporation, because now it's a JV property that is not going to impact on my personal liability. So that's another reason. And also, having a corporation, there is an advantage too. If I want to buy multiple properties, when you have a residential property under corporation, generally you have to qualify for the property anyways. You're personally guaranteeing it, but there is a catch. When you pull the credit history, most of the times the properties under corporation, the liability on it doesn't show up on your credit report. Hear me out. I'll say once again, if you have properties on a corporation, let's say we have four properties on our one of our corporation, all residential, right? And we have another four properties on personal. So when I go to buy another property, when banks pull my credit history, whether I'm buying on a corporation or personal, doesn't matter. They pull my personal credit history because I'm the one who is guaranteeing that property. So now the credit report most likely will not have the liability that I have on my corporations. Okay. So the mortgages that I have on the corporation, even though it's a residential property, most likely they don't show up on my credit report. Okay. So now they don't care when you have a property on corporation if it's not on the credit report. So whatever you have on the credit report, If you have 3 properties on personal name and you have 10 more properties on different corporations, only count is three properties. So that's a big advantage with corporations. And of course, having too many LLCs, for me, managing is the biggest thing, and also taxes on each corporation every year is too much work in my opinion. I try to make that decision based on amount of liability. So I try to keep it under 2 million in each corporation. That is my ballpark range. So that's why, like, all my 5 properties that were residential, 4 properties were under one corporation. If you do the math, they were under 2 million.
Yeah.
And one of my 6-unit building that is going to be at least 1.5 $1.4 million asset, that is under one corporation, and my 17-unit building under one corporation. So it's like, that's how I make my decisions. Again, everyone have their own ways. And if your decision itself is like whether to go on personal or corporation, again, like I mentioned, there is a huge advantage having our corporation, and also tax sides. You can, you have other tax advantages, which we can go on and on. But we gotta run quickly today's live. But in short, I would say it depends on your goals. If you're only buying 1 or 2 properties, maybe having a corporation doesn't make sense because you don't have too much income. But if you're trying to acquire more properties, you want to have, more cash flowing properties, then your taxable income is increasing. You have personal income plus that income, so your taxable income every year will increase. Whereas corporation, you can defer some taxes. There are differ tax advantages where you can defer.
He also asked one more question in the same question. As you may be aware, the mortgage rates are more for LIC versus personal. Is
Yeah,
that
so that's true. Yes, that's right. Like, I mean, generally rental properties, they charge more interest. Generally, it's like 0.4% or 0.5, sometimes even 1%. Yeah, if you never notice,
no.
then you only paid the expenses. You didn't look at the statement. But yes, generally they're more. But most likely, if you have a good relation with the bank, and if you're working with the A lenders, generally they charge almost the same interest rate if you're buying a rental property on personal name or corporation. Like, we have, because you never notice that difference, because we have mostly our properties only with CIBC or RBC.
Yeah.
So that's why you didn't really notice. But rental properties are different from primary home. Primary home has less interest comparative to rental. So again,
So even the rental property that is on personal name, it will have a little bit extra.
yes.
Okay.
Yes. So you're still paying extra even if it's a rental property on personal name as well. So if you're working with a big 5 bank, generally they charge you almost the same interest rate between the corporation rental property and personal rental property. Almost very minor difference. So if your advantages are more, having a corporation, don't let this 0.2% stop you, because anyways you will write off that. It's like very, very minor when you look at the bigger picture, right? Like, it's like $30 $40 or $50 difference
Per month?
Yeah, per month.
Okay.
So if you do a math, if you hold that property for 10 years, 30 into yearly, like what, $300, 350, 350 into 10 years, so 3,500. In 10 years the difference is 3,500, but you can write off anyways. So I would leave it to you. You make that decision based on what your goals are. Let me quickly take one more question, and then we'll call it night so that we can run. What is the maximum debt? Let's say, what's the maximum debt to income ratio if you want to multiply your properties? That's tough to say. I'm not that expert on the mortgage side. All I would say is try to keep your income of the property, your expenses of the property less than your income. So which means it's positive cash flow. So that way your income to debt ratio would be get better, because you have more income, less debt. My life plan is mortgage agent, realtor, rental properties, quick flipping investments. Do you think is good plan at the end, real estate development for? Wow, 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 wow. Bro, it depends on you. It depends on how having ambitions is the best way to fuel your life. So all I would say is take actions. Only you can tell which is better for you, which plan is good for you. Don't let anyone else tell you that, oh, you got to do mortgages, or you got to do real estate sales, or you got to do investing. Don't let anyone tell you that. If you think that you can do best being a mortgage person, then go for the mortgage. Because I know mortgage agents who make millions. I know realtors who make millions. I got my mortgage license first, thinking that I want to do my job and mortgages and continue to invest. But I couldn't keep up with my mortgages because I didn't like it. I couldn't see myself be doing that mortgages for more longer. So then I realized, fuck it, I'm going to do another, right? So you make that decision. What's your personality? Who are you? Then make decisions based on that. Okay, one last comment here. Hey Ditya, Mamta, hey Anji, good to see you. Yes, baby is doing great. She was just crying loudly to say, I want to be on the live. You're not bringing me. So we put her for sleep, and grandma is taking care of her. Hope you're doing good too. Fantastic, guys. Um, Thank you so much for joining the live. Thank you so much for listening to keeping up with me for 1 hour, and looking forward to see you on the next video. Until then, make sure to hit that thumbs up button. And if you guys need any help, in Windsor, especially Windsor Essex, if you want to sell or buy or invest, or you just want to discuss the strategies about investing in Windsor, DM on Instagram. My assistant will schedule a call. And of course, we don't work in the weekends, so please excuse me if we didn't answer your call on the weekend. But I promise my assistant will call back immediately on the weekday. But with that, thank you so much. And congratulations to you again for getting your license.
Thank you.
So if you guys have any questions, reach out to her as well, because she is very active on Instagram. If you guys didn't follow her, what's your handle?
Mamata Reddy Soma.
Mamta Reddy Soma, there you go. So she has a very solid following there, and very, so our more personal life is on her, so our social media. So if you like to see my personal side of angle, make sure to follow her. With that, thank you so much, guys. We're gonna have a fun movie night, and you guys have a wonderful evening. Take care.
Bye bye.